Jim Cramer looking through last week's market wreckage and coming up with a way to look at stocks of interest. He's with me on the floor. Jim, you really analyzed what was happening in the market and you kind of set parameters on where to look at stocks.
I mean, here's the issue with this market. What I'm saying is you need some protection, so you want to go with yield. Now, the one that I just want to focus on is General Motors. General Motors has raised its dividend. General Motors raised its buyback. General Motors raised its earning forecast, and General Motors is now down several percentage from when it did all that. Now, I think the GM is going to stop going down because it yields more than 5%. And in that situation, with treasuries at 2%, it represents really good value. So I'm going to say that a stock like GM is a stock that you should begin acquiring if you know that you like the market and don't own any stock.
Is there any case where a high-yielding stock might not be right to acquire?
Yeah, I mean, I think you have to understand that any oil stock needs more money. Any oil company needs more money. All the oil companies are under pressure because they're underfinanced. So if you buy an oil company stock or midstream stock because you see the yield is very high, I think you'll lose money.
You mentioned GM. When you went through the list, were there a lot of stocks or were there very few?
Well, there were a lot of stocks that yield more than 3%, another group that yields more than 3.7%. I urge people to read the article to get the rest.
Jim Cramer, thanks so much. I'm Rhonda Schaffler for TheStreet.
To get more of Jim Cramer's investing ideas, as well as a peek at other stocks he owns in his multi-million-dollar charitable trust portfolio, subscribe to Action Alerts Plus. Sign up for Action Alerts Plus at getcrameredge.com. That's getcrameredge.com.